UnitedHealth Group is a real titan of healthcare. I mean, a company so massive, it often feels untouchable. But lately, this giant has been sailing through some seriously stormy seas. So today, we're going to break down what's really happening behind those headlines and uncover the core of their surprising strategy.
Okay, to really get your head around UnitedHealth, you got to start with the sheer scale of this thing. We're talking about their revenue in 2024, nearly $500 billion. It's a staggering number. But that number, as huge as it is actually hiding a much more dramatic story.
Because this is the number that's got everyone's attention, a 37% plunge from its peak. So the big question is, right? How does a company this powerful, this dominant, take a fall that dramatic? What on earth is going on?
Well, the answer really starts with one core problem, a massive squeeze on their profits. And to see where that pressure is coming from, we've got to look under the hood at their financials.
And it pretty much all comes down to this one crucial metric, the medical care ratio, or MCR for short. The easiest way to think about it is this. For every dollar they get in premiums from you or your employer, the MCR is the percentage of that dollar that goes right back out the door to pay for things like a doctor's visit, a hospital stay, a prescription. It is by far their biggest cost.
And whoa, here's the problem in black and white. Their MCR jumped, and jumped sharply in just 1 year. Think about it. For every $100 they collected in premiums, an extra $2 and change went straight out to cover medical costs. Now, that might not sound like a lot, but for a company this size, that's a massive hit to the bottom line. And you can bet Wall Street noticed. So why are these costs just exploding all of a sudden? Well, it's not just one thing. It's really a perfect storm. You've got the government trimming back funding for Medicare plans, you have more people, especially seniors, using healthcare services after the pandemic, and on top of all that, the price of these new specialty drugs just keeps going up and up. It's pressure coming from all sides.
But this is where the story gets really interesting. See, UnitedHealth isn't just a simple insurance company anymore. It's really two massive businesses rolled into one, and its other half, this powerful growth engine called Optum, is telling a totally different story.
And boom, this slide tells you everything you need to know about their real strategy. The old-school insurance business, it grew at a solid 6%. But Optum, the services engine, it grew at double that pace. This is a huge signal about where they're placing their bets for the future.
So what is this Optum thing anyway? Well, think of it like this three-part machine. You've got Optum Health, which actually runs its own clinics and provides patient care directly. Then there's Optum Rx, which is a massive pharmacy benefit manager. And finally, you have Optum Insight, the brains of the operation, handling all the tech and data analytics that connects everything.
And listen, you have to understand, this is not some little side hustle. The scale of Optum is just mind-boggling. Its revenue is already closing in on the size of the entire insurance business. It's not the side project anymore. It's rapidly becoming the main event.
And when you put all those pieces together, the clinics, the pharmacy manager, the data, you create what Wall Street folks call a competitive moat. It's a system where they control so many parts of the healthcare journey that it's just incredibly difficult for any of their competitors to copy. This is their secret sauce, their superpower.
Okay, so the stock is getting hammered. The headlines are pretty grim. So what did the people who know this company from the inside out do? Well, let's do what the pros do. Let's follow the money. And it tells a pretty dramatic story.
You know, there's this old saying on Wall Street, and the source material really hits on it. Insiders might sell their stock for a million different reasons. They need to pay taxes, they want to diversify, maybe they're buying a house, who knows. But when they buy stock in their own company on the open market, they usually do it for one reason and one reason only. They are convinced the price is about to go up.
So, keeping that in mind, check this out. In May of 2025, after the stock had already taken a serious beating, the company's president and CFO, John Rex, went out and personally bought $5 million worth of shares. He put his own money right on the line.
And if you thought that was the big deal, hold on. Former CEO Stephen Hemsley came in with an even bigger move. He snapped up a whopping $25 million worth of stock. I mean, that's not just a vote of confidence. That's a massive, flashing neon sign from the people who know the business best.
So, okay, where does all of this leave us? Is UnitedHealth a falling knife you should stay away from, or is it a golden opportunity hiding in plain sight? Let's break down the bull versus the bear case.
All right, the bull case. The argument for buying is pretty straightforward. Optum's competitive moat is real and powerful, the company's sheer scale is unmatched, and after this huge sell-off, the stock is just plain cheaper than it's been in a long time. On the other hand, the bear case is also pretty clear. Regulators are circling the industry, and there's a real risk that these high medical costs aren't just a temporary blip, but the new normal.
And this is where that discount argument really comes to life. Just look at this table. We're looking at the forward PE ratio, which is basically just a fancy way of asking, how much are you paying for future profits? For years, you had to pay a premium price to own UnitedHealth stock, but today, it's trading right in line with its closest competitor and is way cheaper than some others. For the first time in a long time, you're getting the market leader without the premium price tag.
So, after weighing all of this, what's the final verdict from the analysis? Well, it comes down firmly on the bullish side. The core argument is that all the fear, all the bad news, all the regulatory risk, it's probably already baked into the stock price. Meanwhile, the company's biggest long-term weapon, that incredible Optum moat, is still there and as strong as ever.
But, let's just pull back for a second for one last thought here. This whole story, it's about more than just one company or one stock price. The strategy that UnitedHealth is chasing with Optum could have huge implications for every single one of us.
And that leaves us with this one really big final question. If, and yeah, it's a big if, but if this integrated model they've built can actually succeed in bending the cost curve and making healthcare fundamentally more efficient, well, what does that mean for the future of the entire U.S. healthcare system? That's the billion-dollar or maybe trillion-dollar question to think about.